Now it's time. You got to take your foot off the pedal because it's going to get insanely crazy. When you look at inflation, 70s, 80s, that's where we really saw it. But right now, people think inflation's great. Inflation's good. High inflation is the biggest risk. It's extremely, extremely, extremely dangerous. Again, conditions we haven't seen. You never heard me talk about this before. I look at the data and translate the data, and things that I'm seeing today I've never seen before in my 25 years that I've been doing this. I've never seen it before. But we're told, hey, you want to inflate the markets. Inflation's good, creates jobs, encourages more spending, more borrowing, more risk-taking. Look at SPACs, look at cryptos, more leverage. We're seeing across the board. That's what, fine. But runaway inflation, again, the biggest risk in the world. Just ask Warren Buffett. I mean, he wrote extensively on this in the 70s and 80s. And then in the 90s, he really feared inflation was coming back. It also had a lot to say about it before the credit crisis. In those years leading up with that bubble. And he turned out to be wrong. Well, we didn't really have to worry about it. We didn't see it, so everybody dismissed it. But if you ask Warren Buffett today, what is the biggest risk to the market? What could crush it? He would say runaway inflation. I guarantee it. But nobody cares because, again, we haven't seen that. We haven't seen it. All investors in at least 15 years, 20 years. We saw a little inflation leading up in one market, in the housing market. That's what caused the crash. But runaway inflation, guys, is a huge risk. And when it starts, and why is it such a huge risk? Because when it starts, it's like a train going downhill. It's impossible to stop. You can't just, during the credit crisis, all right, let's inject the banks with, hundreds of billions of dollars. They're probably not going to use it, but it'll secure the banks, put more confidence in it. No, you can't do that with inflation. Oh, okay, let's just take inflation out of the market. It doesn't work like that. It's almost impossible. You want proof? Look at the 70s and 80s. Inflation just running wild, and we had terrible policies during that time. Terrible policies. And they're looking to achieve sustainable employment while achieving price stability. That's impossible. That's almost impossible to do. So we're seeing prices gradually going up, but our Fed today is like, okay, we're okay, because prices are only going up a little bit, and we look at a gauge that's, basically structured so it's almost impossible to see inflation. But now we're even seeing inflation in that index. That's a CPI. So what happened? 1979? Runaway inflation, 14% inflation? Nobody knew how to control it. And the policies in the 70s, low unemployment, strong growth, higher wages. In order to do that, you must have lower rates. And there's these terrible policies in place where inflation started going higher, just like today. It was like pouring gasoline on that fire. Making inflation surge. Again, almost impossible to achieve that sustainable employment while also achieving price stability. So Volcker said, you know what? F it. This is what we're going to do. I'm raising rates. Everyone's like, holy cow, you're raising rates. That's insane. It's going to slow down the economy. That's what you have to do. That's the only way to control inflation. Well, there's several ways. I'll cover them in a minute. Because the Fed said, I'm also going to buy bonds, which takes money out of the economy. And Volcker knew this is going to cause a recession. It actually caused two of them. The prime rate was over 20%, which slowed down growth considerably. But again, this is how you control inflation. These are the measures you need to take. You had to take a big step back, which was very hard to do because everyone hated that guy for doing it because you're forcing businesses to slow, you force less lending, less leverage. You need wages to come down. That's the way to do it. But what Volcker knew is that was good for long-term stability. Nobody thinks long-term today. No way. It's tomorrow. What's going to happen tomorrow? Biden, we need to get into the chip industry and fix it. Really? You're going to fix the chip industry? Holy cow. You should see the interview. Look up CNBC, and it is Rogers, who's the former CEO of Cypress Semiconductor. And listen to that interview recently. Unbelievable. Unbelievable. Fantastic. He'll tell you why the government shouldn't even go near the industry. And this is a guy that's testified before as one of the smartest guys in the industry. Incredible. But again, Volcker knew you had to take that big step back. Now, when we compare it to today, what do we have? We're not allowed to have a recession. We're not allowed to have a pullback. We're not allowed. I mean, the pandemic forced that. But when we did have that recession, what happened? The government's like, here's trillions to everybody. You guys are fine. Here you go. Keep spending, spending, spending. So now we have inflation. And it's insane. And our government and the Fed, they don't want to take a step back. And they're throwing gasoline on this thing right now. And it's not good. And that's why I'm very nervous, because we're seeing the writing on the wall. This happened in the past. We have a checklist of indicators that always warn us that inflation is incoming, could surge. What are they? Real estate prices soar every time. We're seeing that. Yes, we saw during a credit crisis, but not everything soared. I was like isolated to one industry, which was just filtered down. It was so leveraged, it almost blew up the whole entire financial system. You usually see stocks on fire, especially growth names. I mean, I don't know how many trillion-dollar companies. Did you ever think we'd have trillion-dollar companies like 5 years ago? Trillion-dollar companies? How many do we have? These companies are enormous. It's bigger than the GDP of like 80% of the countries. These guys, that's how big they are. And what do you see? S&P 500 at 22 times forward earnings. Very, very expensive valuations. You usually see commodities surge. Are we seeing that today? More than we've ever seen it. I mean, again, oil price. Have you seen lumber? It's insane, lumber. Lumber's insane right now. I mean, it is really insane. I told you the statistics. I think it's like now 10% of the increase in home prices is just due to lumber. I mean, the average home price usually increases by 2% averagely annually. With lumber, it's 10%. Are you out of your mind? You try to buy a house right now. I'm not talking about the major cities either, because that's going to be, everybody's moving out of there. But in Florida, you can't buy. If I move off the place I live because it's Amelia Island, I won't be able to get back on. I'm not kidding you. I won't be able to get back on unless I pay, twice the price for a house. But it's hours now that these things are flying off the shelves. But look at copper, guys. Look at corn. Look at cotton. Look at sugar. Most importantly, look at wages. That is the ultimate writing on the wall. Now, in April 2020, which is the Bureau of Labor Statistics, again, I'm not trying to bore you here. I'm trying to support, and why I'm so nervous about this, but this is only like the past 2 weeks, a lot of this data, which is just mind-blowing. Now, the Bureau of Labor Statistics, this is in April 2020, guys. So they reported year-over-year growth in averagely earnings. They skyrocketed 8%. It was the highest since they've been observing this since 2006, the highest surge. This was right before the pandemic. So we saw wages increasing. We also had the economy that was kind of slowing, not really growing that fast. And then we had the pandemic. Okay? Just everything forgotten. No worries. Market crashes. Now what does the Fed do? The Fed injects the money, $10.5 trillion. I cannot believe that. I say that all the time. $10.5 trillion for % of GDP. Now, everybody's saying on the calls, hey, we're getting back to pre-pandemic levels, which makes sense. We have most of the adult population, especially over 65. I mean, it's almost, I haven't looked at the numbers, 60, 70% that have been vaccinated. But you're seeing people getting vaccinated like crazy now. Unbelievable stats. Talk about that later with Daniel. So we're seeing the reopening trade. Again, it's pulled back a little bit because it's been up so much. But you have everybody sitting on tons and tons of money. So you injected $10.5 trillion. You're keeping interest rates low. You still said you're buying bonds. And you're announcing another $2.3 billion infrastructure package, which again has a little to do with infrastructure. What do you think is going to happen? Wage growth is going to, it's surging right now. We're seeing it. That's why you can't hire people. You have to raise those wages. I mean, it's here. Again, that explosion in the housing market. Not enough builders to build homes. Supply of homes at an all-time low. What about import prices? That's a pretty big deal. The price of goods we pay from other countries, right? They bring their goods here, shipping it in. Last month in March, they grew 0.69%. You probably have no idea. Because whenever there's a 0 point whatever and it's an inflationary indicator, nobody cares. 0.69% is not a big deal. It's nothing. Nobody cares. You guys, I guarantee 99% of your listeners have no idea that import prices rose 0.69%. So you don't need to pay attention to it. That's the equivalent of 8.6% at a compound annual rate. 8.6%. You know how insane that number is? The core CPI came out recently and showed just a 0.34% increase. Again, no big deal, isn't it? Like a 2% number we should be worried about with CPI, right? That's what they ingrained in our head and in the world. 2%, as long as we're under 2%, we're a little bit above 2%. But yeah, it showed a 0.34% increase. at a compound annual rate, that's 4.2% inflation. Inflation is here and nobody sees it. Nobody cares about it. The businesses are screaming as loud as they can. We can't hire employees. Wages are starting to rise. They're going to surge past those levels pre-pandemic. And what else do we need to see? Home prices. What else do we need to see? I mean, how can't the Fed see this? 4.2% inflation? This is CPI. This is the gauge they look at. I mean, have you heard that number anywhere when they talk about the CPI? Anywhere? No, you hear, well, it's going to be below 2%. Nobody said it's 4%. Everybody still thinks that it's probably a little over 2. We're fine. They said it might go to 3. It's 4.2% now. It's going to be 6, 7, 8% soon. They have no choice. So what do you need to do right now, as of yesterday? Similar to what Vodka did. Use wage and price controls, but that's going to lead to a pullback and likely a recession. And lots of job losses. So our politicians are not even going to, no way, absolutely no way. You can't do this no matter what, no way. The politicians and the Fed are in bed together, so, no way, no way. You reduce the money supply by the Fed selling government bonds, just to take money out of the market, dollars out of the market, but the Fed said recently, we're still buying bonds. They're flooding the market with even more money at over 4% inflation. They're flooding it, pedal to the metal. Or they could directly raise interest rates, which the Fed can't really do and said they're not doing for several years. In short term, they could implement yield price control. I'm not sure what's going to happen if we see long-term rates rise, which we saw. They pulled back last couple of weeks. But they rose tremendously in such a short period. But there's no way the Fed's going to say, hey, we're raising interest rates. Or we're going to implement wage price controls. No. Because you know what that means? We have to take the punch bowl away. And we're addicted to the punch bowl. We all want money. We all want it. We're waiting for those checks. We're staying home. They're paying people for staying. Still, people don't want to go back to work because they're getting checks. Still. And more is coming. Because there's been no risks to spending as much money as you can since 2008. Since we injected the banks with capital. No risk. And you only learn from your mistakes when stuff happens and you go through that process and it really hurts you. It didn't hurt us at all. It made the big banks even stronger. They didn't learn a lesson there. But you have to do these things or we're going to see runaway inflation. And I can tell you, very few people outside of perma-bulls who have been predicting inflation since the 70s and 80s, and you know those names out there, I've been predicting it. But I don't think anybody sees this thing coming. The CPI over 4% right now, guys. Over 4% and a lot more money coming into the system. And this economy is about to boom. Everything is opening up. People are going to be buying everything. And people are paying these high prices. That's fine. But I truly can't remember another time in history where demand has been this great that supply is not even close to keeping up. You close plants because there's no demand to save costs. They're closing plants because they don't have chips. And they finally said, we're going to reopen them pretty soon. But think about that for a minute. When has that happened? When have restaurants said, I want to expand and open 40 restaurants? There's enough capital out there. And people give away hundreds of millions of dollars like nothing to companies these days. Look at SPACs and all that garbage. We're seeing that blow up now, which I told you would happen. But when have you seen these types of conditions? From a business owner's perspective, which is a lot of people out there that listen to this, from a business owner's perspective, how do you manage inventory in a period that's never happened before? And that's happened to Taiwan Semi. Again, they're not producing any more chips with crypto miners. They don't want to have these massive inventory levels because they got caught holding the bag last time in 2017. So how do you manage inventory levels? Because if you could manage inventory levels, wouldn't you think the Sony PlayStation 5 would be on the shelves? At least some people could buy it. You still can't even come close to buying it. There's still probably a 5-month waiting list. It's impossible unless you want to pay double on eBay and triple. How do you manage a business during these times? Pretty hard. My restaurants here, I said it earlier, there's several of them that we talked to operating at 60%. I'm like, 60%? No, we could operate at 100%. We're open in Florida, but we just can't find anybody. We can't. And what's the solution to this? What is the solution for restaurant owners? What's the solution for all of these people? What's the solution for Procter & Gamble? What's the solution for Coca-Cola? There's only one. You got to raise prices. You must raise prices across the board, but you must raise wages. You have to increase that. And that comes out to be a massive, massive expense. And that's okay right now. because everyone has a lot of money courtesy of the government. But it cannot last. There's no way we could last on this trend. The data that's coming out, listen to some of these conference calls, listen to these companies. It's unbelievable of how much they're raising prices, and they need to raise prices. They're going to have to just increase wages tremendously to get more people to work for them. And again, that results in much, much more expenses, which is fine for now. But what scares the hell out of me, because what we're also going to see, which all of you know, is tax increases are on their way. Right? We didn't even talk about that. That's huge. You want to see how huge it is? Look what happens when we cut taxes for businesses. The market surged. Look at profits. They went from barely growing to double-digit growth immediately in 2018-19. So, big deal. Now you're taking that away from companies. You're raising taxes, even on individuals. But it's not a pretty picture any way you look. Actually, I'd say it's as ugly as it gets. And it's difficult to believe, and it's hard to see because everything's at all-time high. You could buy Dogecoin and be up 400% in freaking week. Who cares about anything else? I mean, it's awesome out there. Just buy whatever, and it's going to go higher. Buy assets, NFTs, which, again, Rob Gronkowski without an NFL logo, spiking a football I could see 5 billion places, but hey, people are going to pay 20 grand for it, 30 grand, 50 grand. I think he sold a lot of his NFTs for about 1.6 million. Amazing. Pretty cool. But this is the playbook. This happens before every single crash. Every single one. Everything is positive until it's not. You see strong growth year over year because it's compared year over year to a period which was terrible in the pandemic. So you're going to see GDP numbers, 5%, 6%. That's fine. We're not going to be like that next year. No way. Absolutely not. It's going to slow considerably. Earnings and sales, especially go double digits this year, makes sense. Again, year over year, makes sense. They took a big step back. 2022, that's not going to continue. And you know as well as I do, what is the market? The market is forward-looking. So 2022 is here, according to the market. So you guys got to be careful out there. And it's dangerous. But the market, if you look at recent earnings, they may have already figured this out. Since companies are blowing away estimates, some of the ones that are blowing away estimates, what are you seeing? You're seeing their stocks actually pull back. J&J, Procter & Gamble, Lockheed Martin, all blew out their earnings. Their stocks pulled back. And then you have companies like Netflix, who did not meet earnings, and it got nailed. So for me, at this stage, I'm doing more research on it. Looking at the best ways to play it, the best ways to position yourself. Again, it's something that could be corrected if our politicians, which is asking a lot and probably never happened, but the Fed and even the Fed governors, they have to see this. They have to get out there in the world. They got to stop closing themselves in, locking themselves in rooms and just bell curves everywhere. And you got to talk to people. You got to see what's going on. That's great about this podcast. You guys email me, Frank Curzio Research, all the time. You see what's going on. You're seeing prices being raised across the board. You're seeing wages go up. All these are signs of massive inflation is coming. We haven't seen those trends. We haven't seen those trends in a while. We haven't seen a real estate bubble in a while. Now we have real estate bubble, which it's going to get bigger and bigger and bigger. Look at collectibles. Look at everything. Look at the prices. Just look at the commodity prices. Again, these are all things. These are perfect signs. You could see the writing is on the wall. And it can get really, really ugly because if you go back and listen to Warren Buffett, listen to the times of high inflation, it takes 5, 7, 10 years to stop it. It's not something that you could stop immediately. And it's here and nobody really sees it. The people in charge do not see it. And that's what scares me.